Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Chifeng Jilong Gold Mining Co. Limited Annual Report. Chifeng Jilong Gold Mining Co. Limited offers a diverse range of businesses and services. At its core, the company engages in gold mining activities, including exploration, mining, beneficiation, and sale of gold in various regions such as China, Southeast Asia, and West Africa. In addition to gold mining, Chifeng Jilong is also involved in polymetallic mining, which involves extracting multiple metals from a single deposit. The company explores for other valuable minerals like zinc, lead, copper, molybdenum, and silver deposits. Beyond mining, the company has diversified its services into various sectors. These include copper smelting, where it processes raw copper ore into pure copper metal. Chifeng Jilong is also involved in industrial hazardous waste disposal, ensuring that toxic materials are handled and disposed of safely. Furthermore, the company offers resource utilization services, which involve reusing or recycling valuable resources from waste products. This includes dismantling waste electrical and electronic products to extract reusable components. Additionally, Chifeng Jilong provides power battery recycling services, helping to reduce electronic waste and recover valuable materials. Overall, Chifeng Jilong Gold Mining Co. Limited has established itself as a multifaceted company with a wide range of businesses and services that cater to various aspects of the mining and resource extraction industry. Chifeng Jilong Gold Mining Co. Limited market capitalization of 91 billion is significantly larger than the average industry peer of roughly 10 billion. This shows that Chifeng Jilong Gold Mining Co. Limited holds a significant advantage in their industry. Chifeng Jilong Gold Mining Co. Limited trades at a lower price-to-earnings ratio of 22 times and a higher price-to-book ratio of 5.12 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 34% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, the international gold prices hitting historic highs has significantly contributed to revenue growth. Additionally, successful listings on major stock exchanges such as the Hong Kong Stock Exchange have raised substantial funds, further boosting revenue. Strong demand from institutional investors in various regions, including Asia, Europe, and Australia, has also played a crucial role in driving revenue growth. Furthermore, hedging demand, diversified asset allocation, and improved investor sentiment in the global gold market have all contributed to increased revenue. The company's ability to increase production, reduce costs, and solidify resources has also been a significant driver of revenue growth. Strategic breakthroughs, organic growth, and external expansion have further transformed developmental momentum into tangible growth drivers. On the other hand, the primary drivers of revenue decline can be attributed to a few key factors. The decline in silver sales by 99.9% has had a significant impact on revenue. Additionally, metal streaming arrangement revenue decreased by 5%, while advances from sales of goods revenue decreased by 51%. These factors highlight the importance of diversifying revenue streams and managing risks to mitigate potential declines in revenue. The net income of the company experienced a significant decline from RMB 1,035,053.08 in 2024 to RMB 403,196.14 in 2025. This decrease can be attributed to various factors, including losses from force majeure and increased non-operating expenses. Profit margins also underwent a change during this period. The domestic mining segment's profit margin decreased from 55.1% in 2024 to 53.6% in 2025, while the overseas mining segment's profit margin increased from 26% to 24.2%. However, investment income saw a substantial decline, dropping from RMB 659,337,082.51 in 2024 to RMB 4,070,495.72 in 2025. Interestingly, the operating profit margin showed an improvement, increasing from 0% in 2024 to 100% in 2025. This anomaly suggests that despite overall losses, the company's operations were profitable during this period. The reasons behind these changes are complex and multifaceted, but they undoubtedly had a significant impact on the company's financial performance. The company's financial performance indicates a strong ability to generate operating cash flow. In fact, it has been consistently producing positive operating cash flow across all years, except for one instance in 2024. The significant increase of plus 69.97% in net cash flows from operating activities in 2025 is particularly noteworthy, standing at RMB 5.556 billion. This substantial growth demonstrates the company's financial health and stability. The data provided on multiple pages confirms this positive trend, with figures consistently showing a surplus in operating cash flow. The only deviation from this pattern occurred in 2024, where the net cash flows from operating activities stood at RMB 3.268 billion. However, even in this year, the company still managed to generate positive operating cash flow. Overall, the evidence suggests that the company is well equipped to manage its finances and generate a steady stream of operating cash flow. The company's debt level has undergone significant fluctuations over the past year. While total liabilities have decreased, certain types of liabilities have increased. Specifically, short-term borrowings have risen by RMB 700 million, offsetting the overall decline in liabilities. Long-term borrowings and financial liabilities have also seen substantial decreases, with long-term borrowings dropping by 88% and financial liabilities plummeting by a staggering 100%. However, interest expenses have shown mixed results, with some years experiencing a decrease, while others remain steady or even increase. In terms of specific numbers, interest expenses decreased by 6.7% in 2025 compared to the previous year, but still reached RMB 57 million. On the other hand, related payments such as repayment of gold leasing business and lease payment have increased by 28% and 4%, respectively. These mixed signals suggest that while the company's debt level has decreased in some areas, interest expenses remain a concern. Management's outlook for the company is centered around long-term growth and adaptability. The company aims to become a dedicated gold mining entity by divesting non-mining assets and driving rapid expansion through internal exploration and external mergers and acquisitions. To achieve this, management plans to leverage equity financing, reduce debt reliance, and employ structured financial instruments. The company also prioritizes technological innovation and management optimization to strengthen its competitive position. Additionally, it aims to enhance risk resistance capabilities by hedging against exchange rate risks and other potential threats. Furthermore, the company emphasizes work safety and occupational health through a comprehensive responsibility system. Management's strategy is focused on promoting high-quality and sustainable growth while reducing costs and improving efficiency. The company's mutual prosperity and development culture aligns stakeholders' interests, ensuring that all parties benefit from its operations. Overall, management's outlook is geared towards long-term success and stability in the gold mining industry. The company has a history of paying dividends to its shareholders. Over the past 3 financial years, it has distributed a significant amount of cash in the form of dividends, totaling RMB 994,633,804.34. The dividend payments have varied in terms of both amount and frequency, with different amounts being paid out annually or quarterly. However, there is no clear indication that the company has engaged in share buybacks during this period. Concerns about inventory buildup and supply chain disruption are evident from the provided data. The increase in raw materials and work-in-progress inventories suggests that companies may be stockpiling goods due to uncertainty or disruptions in the supply chain. The provision for inventories has also seen a significant rise, with finished goods provision increasing from 1.97% to 25.14%. This indicates a potential issue with production or delivery of goods, which could lead to inventory buildup and further strain on the supply chain. Furthermore, the inventory impairment provision has increased from RMB 5,663,860.45 in 2024 to RMB 4,870,074.8 in 2025, indicating that companies are writing off a significant portion of their inventory as impaired. This is also reflected in the deductible temporary differences, which have increased by over RMB 70 million. Overall, these statistics suggest that there are indeed concerns about inventory buildup and supply chain disruption, which could have far-reaching consequences for businesses and economies. And that concludes the financial summary for Chifeng Jilong Gold Mining Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.